to that story. Let's listen in to Arundhati Bhattacharya, who's speaking on the sidelines of the SBI AGM.
To look at the areas that we have been concentrating on, whether they be in the area of risk recognition, whether they be in the areas of NPA control, whether they be in areas of increasing our non-interest income, collaboration across all the various subsidiaries of the bank and within the bank. So in very many of those areas, I think not only very many, I will say in all of those areas we have seen a huge improvement. The NPA numbers may have gone up, but the basic way of treating our entire asset pool, of ensuring that going forward also the quality of our assets gets better, I think we've done an enormous amount of work in that, and it will show the impact going forward. You can't see it right now because obviously there's always a lag effect. There is a legacy effect. So as the legacy effect wears off, we will definitely see that the asset quality, etc., and maintenance of those will become much better.
Ma'am, you said FY17 will be a better year compared to this current year. What gives you the optimism in this current scenario that it may actually turn out to be a lot better, especially in terms of asset quality?
Actually, in terms of asset quality, I didn't say that it would be a lot better. In fact, I said there could be pains as well still. Okay. Because obviously, once you have classified an account, the numbers that we have taken are basically on the fund-based front. But the non-fund-based also gets converted subsequent to classification. So during this year, it is also going to be difficult. But what gives us hope during the year is that the policy initiatives that we saw last year, which had begun last year, those are continuing. Not only that, there are some good triggers on the horizon. One of the triggers, of course, is the monsoon, which we hope will be as per expectations, which is 106% of long period average. The second trigger is what has just happened today, the 7th Pay Commission. So that also should actually ramp up consumption in the country. As you know, we need demand to come back. And because we are seeing demand, at least in certain segments, we are seeing good demand, whether it be commercial vehicles, whether it be in the area of power generation, there is good demand. And if this becomes a little more broad-based, it will definitely be very good for the economy. So that is what means when I'm saying that FY17 looks to be a better year. It's because the green shoots that we saw in FY16, they seem to be becoming more in number this year.
Ma'am, what about the S4A scheme? How many companies will actually, since you said you are working on many such cases during this quarter, how many companies will even qualify given that 50% sustainable debt criteria?
Actually, I'm not sure how many companies will qualify as of now. We are looking at all of the companies, plus, we need their balance sheets. Many of them haven't yet given us the latest balance sheets, audited balance sheet. So only after we get all of those, we will be able to find out. It will depend. If we find companies, will do them. There is no question of sort of fitting them in, even if they don't fit. In the context of the S4A, the way it has been given, obviously they are relying very much on current cash flows. So we'll have to see how many fits in.
Those that do fit in, we'll do it. With RBI on how certain areas can be tweaked. For example, only projects that are operational would be eligible for the these norms. So what are your views in this aspect?
And that is fine, but projects that are eligible, that are already completed, should be the ones that should be treated under this, because in this, there is a concept of existing cash flows. Projects that are not completed will not have cash flows. So obviously we need to look at those units where projects are completed and where cash flows are there.
Is that 50% target, 50% sustainable level? Is it too high?
No, that it depends, In fact, there could be many units which won't even have to go down to 50%. It could be even less. So yes, units are there. At this point of time, if you tell me exactly how many, I do not know. We are waiting for balance sheets. Also, as you can understand, S4A clearly says that we have to have a TEV study and a forensic. So without doing the TEV and the forensic, there's no point in looking at the numbers. So we are waiting for all of those studies. Once those come, we will take a call as to which one.
Is it likely that S4A, actual work on S4A will only take place in the next financial year, not this one?
No, not necessarily.
The actual resolution got.
No, it will happen this year. Maybe not in this quarter. That means the July-September quarter we may not see actually something happening. But definitely towards the second half of the year there will be accounts that will.
What about the stressed asset fund now that NIIF has said it may not first invest in stressed assets per se? Are you talking to more partners with the
We are talking to several other people as to how it can be done. NIIF has said that their first fund, they would prefer it to be one which actually would like to support greenfield investment, and that is fitting in the fitness of things because the government is looking at kick-starting more and more projects. So to that extent, they would like to concentrate on that area. But there are several other players in this in the stressed asset area, especially in the private sector. There are a number of funds who are abroad who would also like to come in. So we are talking to a lot of them.
Would there be visibility bank level?
Let him ask a question. Yeah.
Do you see visibility of something fructifying in this financial year? That is stressed asset fund being...
Yes. I do hope that will happen.
Coming to the other thing, FY17, Pay Commission has also given a lot of money will be in the hand of the employees. Would it improve or address some of the liquidity problem in terms of deposit growth?
I should think so. As you know, for the first time, deposit growth has been less than 10%.
Right.
Okay, in the first quarter. So definitely, if there is more money in the hands of the people, some amount will definitely come into deposit growth.
In that respect, do you rule out any further moderation in the deposit rate to attract that money?
Moderation in deposit rates will not attract the money. Increase in deposit rates at this point of time, I don't see it happening. Because actually speaking, if you look at inflation, depositors are getting a very real rate of interest. So to that extent, I don't really see deposit rates going up.
You focus on a credit growth of 12 to 13% for the full year. Now with the first quarter almost over, does it look feasible or?
See, first quarter is always slow. Every year first quarter is slow. So you should not base anything on the first quarter. We need to look at the next and the next quarter, then we will know. But we are hopeful that it will happen given the kind of impetus that the government is giving for various projects, etc. We hope 12 to 13% is achievable.
Ma'am, companies that have already invoked SBI, what's the progress on that front? And do you see S4A norms being complemented in cases where SBR has been invoked? How is that?
See, the fact of the matter is, in wherever SDR has already happened, we are already talking to many people for actually, coming in as a strategic partner or taking over management. In those cases, S4A, if we also have to do, it takes on a different complexion. I am not saying it is ruled out. At this point of time, we are not doing anything simultaneously. But I think it will happen. In the future, we may see this happening with both of them happening. But let us see how things go. As you know, SDR, we have been very selective. And we have only invoked in those places where we had some genuine interest from buyers.
All right, the big point to note from that